So if the biggest opportunity in your life is coming up, what's the game plan? First, we got to change how you view money. What's up, everybody? Another week of wealth webinar. Today, we're going to talk about real estate. We're going to talk about money. We're going to talk about how to preserve, protect, and build your wealth when everybody else is losing it. Look around. It's not getting better, is it? Yellen's coming out saying they have to redefine what actually constitutes a recession, because they don't want people seeing that now, pretty soon here, we are going to be in a recession. So they just change the rules and make it so, hey, we're not in a recession because we changed the technical definition of what a recession is. Brilliant. But are you buying it? I hope not. It's time to get hunkered down. It's time to plan, and it's time to get ready. And you know what? I'm pumped because not only is tomorrow my birthday, tomorrow's the day that we got a bunch of fun, awesome people flying in for the event. The event that starts Friday night with the VIP, and then Saturday and Sunday, we are going hard to teach people how to get ready for this monster, this storm that we've been talking about for, I feel, too long, that is finally, well, almost technically here. But if you listen to the Yellen, it will never be here because, hey, the government just says everything's good. We're great. Things are good. We're fighting the inflation monster that we created. We'll have it all taken care of. And in doing so, everything's going to be good. Let me correct that and just add a couple lines. Where she says everything's good, I'm just going to put everything's going to be destroyed. And then where she says everything's going to be good, nothing is going to be okay. Now that we redefine what Yellen's actually saying, but not saying, what we need to do is find out how to make a whole heck of a lot of money. This is a once in a lifetime shot, folks. You got one opportunity to make a go of this, one opportunity to literally set yourself and your family up for the rest of their lives. So let's dive into it. All right, Stephen, what do we got here?
So, we have a lot of new people on right now, maybe not completely familiar with everything that we do. So I kind of think we should maybe just kind of start at the beginning, kind of what, why we're here, what we do. And I can share my screen here if you want. All right. So, this is what we kind of consider our money school essentials training that Chris was talking about coming up this weekend. And this is something that's been put together over well over several decades of us personally being financial advisors in the past and being on that side of the traditional investment and traditional savings kind of industry, so to say. And then, Chris and I have both transitioned from the traditional role to getting into our own businesses and becoming our own investors and taking back control of our money through things like real estate investing and private money lending and, starting companies and corporations and LLCs to be able to save on things like taxes and really control our financial destiny. And a lot of what we do now is share those experiences, those trials and tribulations, those losses, those problems, those roadblocks, and also the successes and the goals we've been able to meet and continue to grow upon. And so what we've done is we've taken all of this. I've been doing it for 15 years. Chris has been doing it for, 18, 20 years. And we put it all together into a 2-3 day training event. And what we've done is we've taken the most important aspects of your financial life and we focused on those things that anybody can do right now today, no matter what side of the fence that you're on. So what do I mean by that? What is Money School and why am I here? So who are you? So one of the things, whether you're coming to the event this weekend or not, something that's very important is to understand where you're starting right now today. So where's your money? What are you saving? What kind of debts do you have? What kind of interest are you paying on that? How can we start recapturing that? Because you got to know where you are today to know where you're going to in the future. So one thing that we require all of our students that attend our training events do, and if you're thinking about attending, then pay close attention here, but I want you to write that down. Where are you today? Where's your money? Because we're going to start digging into this and we're going to start identifying places that maybe you weren't aware about. One thing we'll talk about today is using the equity that's built up in your home over the last couple of years to get that money to make more money for you. And we'll show you an example of what to do with that, just to give you a sample real fast. So, or maybe right now we're putting our money, into a 401k, but maybe there's a better place where we can redirect that money, or maybe we're saving a lot in our savings account for a rainy day or for a collapse. Well, maybe we can store our money somewhere else where it's actually growing for us, as opposed to no growth within a savings account, for example. So that's really what Money School is and why we're here. And what we've done is, we've really built it upon a platform of what we call the 3 pillars of education. And
This is the key right here. I mean, real estate, tangible assets, assets you can touch, secure, you can collateralize, and then money. Money's the bridge of it all, and then legacy. I mean, we all have to do something that's going to be bigger than us, whether you want to or you don't want to. I mean, just start with your children. I have a 2-year-old. My legacy is my daughter. What I teach her and what she does throughout her lifetime, she's got a longer runway than I do. So I've only got so much time to spread the word and help a lot of people, but she's got more time. So if I instill values and lessons upon her about money and how money really works, not the lies we've been taught, she can then go spread that. So when we talk legacy, legacy doesn't just mean I got to accumulate a whole bunch of money or buy a whole bunch of life insurance. And then when I go, like, they got a bunch of money. That does nothing. They'll go through that money if they're not taught how to use money. So I've been talking a lot about legacy primarily because I've got a TEDx talk coming up. And that TEDx talk is going to be me explaining a letter that I wrote literally to my daughter, bawling my eyes out, teaching her the laws of wealth, or the lessons of wealth is what we call it in the letter. And that's going to be one of my biggest legacies that I leave behind, because that legacy then teaches her these, and then she can spread the word and teach that. And then other people, that's what a true legacy is. You have to be remembered after you're long gone. So how are you going to do that? But money certainly is the pillar for it all. It's the tool we all need to understand, which is where our core fundamentals is in teaching you money, but not money as like a thing that we want to make it. Everybody was brought up differently in whatever you were taught, by your parents determines how you view money. I grew up in a household where we didn't have any money. So I've always had a negative impact or a negative outlook on money up to, recently, where I would look at money and think of it as a bad thing because I never had it. When I wanted things, we didn't just go out and buy them. So that was the wrong way to be brought up into money, but it was my way. And then luckily I transitioned. Other people that are brought up in a lot of money and money was talked about positively have a different different look on it. But if we just forget about what we've learned in the past, and we just understand that money is the tool in the tool shed, it's just the tool designed to solve a problem. And we take it from there and we then learn how to use that tool. It's going to take time in some cases, but every one of you have a different view. Every one of you want to plant a different garden and build a different garden. So it's going to require more tools or less tools. You pick that. We're going to give you the ways to use the tool. And then from there, you're going to develop your next step and your legacy.
What we fundamentally do, like you said, Chris, we concentrate on money, but at the end of the day, what we really do is we teach how to take back control of that money and solve your money problem. And when we dissect that and we start looking at, well, what do you mean by take back control? I have control of my money. I can go down to my bank account and pull money out. I can go, I can put money into my retirement accounts and save for the future. But let's think about that for just a second, right? So, Chris, you do a great job of kind of describing, how a 401k works. And, it's something I've thought a lot about because this starts from a very young age. Like you're saying with your family, when you don't grow up with money, it's a negative thing. It's something that we don't talk about. Most people, it's not something, you're at a cocktail party or hanging out with your neighbors. You're not like, hey, what do you invest in? What do you invest in? Like it's become a little more open these days now that we have a lot of online trading accounts and brokerages and apps and things. So investing's coming a little bit more mainstream, but people don't talk about what their salaries are, how they save money, their personal financial strategies. People typically just don't talk about that. It's kind of hidden. So what we want to do is start, opening that conversation up, because once you understand that money is just a tool to reach the goals and things that you want to do, and there's no mystery around money, it's not complicated once you understand it, right? So when you take back control of your money, a great example of that is a 401k, because most people, they go to college and you get out of college, you get your first career job. So you go and you sit down, you go to that job and you start on your first day and they're like, okay, this is your desk. This is where you're gonna be working. Now go over to HR and they're gonna do the paperwork with you. So you go in there and you sign in, hey, do you want insurance, health insurance and term group coverage insurance? And and we have these, this awesome benefit for you for retirement. We have a 401k that we offer, a company sponsored 401k. You're like, all right, well, what's a 401k? And they're like, well, it's a great, awesome benefit because it's a way for you to save for retirement. So you'll have more money in retirement someday and live that retirement that you've always wanted. And what we're going to allow you to do is we're going to allow you to put money in this 401k before you ever pay taxes on it. So whenever you're making that money right now, we're going to get that money in the 401k. It's going to lower your tax burden and we're going to get it in there. And then it's going to sit in there and it's going to grow for you for the rest of your life until you retire. And then at retirement, you're going to pull the money out and you'll pay taxes on it then. But don't worry, because you'll be in retirement, so your taxable income will be less, and so you won't pay as much taxes later on. So fundamentally, just think about that for a second. You're not going to pay more taxes later on. Question number one, what's happening with taxes, Chris?
They're going up.
Why? Because we're $30 trillion in debt. Because we print money like it's going out of style. We spend it like there's no tomorrow. The only way to pay for all this is to eventually continue to raise taxes over and over and over again. So if you think you're going to pay less taxes later.
Just for the record, everybody, we are at the lowest tax bracket in history of this country. Just putting it out there, the lowest. So where can it go when you're at the bottom? Up.
Yeah, I mean, so absolutely. Number two, I'm going to be in a less taxable income bracket at retirement. Why? Because I'm not making money anymore, because I'm living a barely survivable retirement. And that's why I'm in a low tax. Who the hell wants to aim for that for their goal for retirement, right? So I want to be paying just as much taxes when I'm 70 as when I am, if not more than what I am today, right? I always want to improve. So you're like setting yourself up to like not be successful in life, which is weird. And then you're like, okay, well, let's forget about the tax part for a minute. All right, fine. All right, well, I'm going to put my money in there. And then let's say, I'm 22 years old. Well, let's say when I'm 30, I want to buy my own house. And I want to, to move into, or I want to go and buy a new car with the money that I've been saving for the last 10 years or whatever. And if you go and you pull the money out of there, what are they going to do? They're not only are you going to pay taxes on it, they're going to penalize you 10% for pulling the money out before retirement age. So they're penalizing you for taking your own money to spend. And number three, what are you investing in the stock or in a 401k? What are your options in a 401k? Your options are stocks, and stocks. You're investing in the markets. The only options are like mutual funds or lifestyle funds or whatever they call them, but it's all full of different types of stocks. Now, maybe it's an aggressive stock fund versus a conservative stock fund, but you're in the stock market. So that's all fine and dandy. You're like, all right, well, I can only invest in stocks. Well, tell me about stocks. Like, do they make money? And they're, oh yeah, historically stocks have always gone up. You're going to make money. Just look at the charts. They never go down over time. Okay, fine. Well, what if I get to 58 years old, I'm going to retire at 60, and all of a sudden we're at the top of a debt cycle. We're at the top of a market bubble. We're at the top like we are right now. And now I'm planning on using my money from my 401k, but what the hell? All of a sudden I've lost 30% this year. Most economists say I'm going to lose another 30% by the end of it. Holy cow. Now all that money I've been saving for the last 30 years is cut in half of what I was expecting to have there. And I don't have time to wait for it to go back up over time like I was told when I was 22 years old, because I need the money now to live on. So there's just so many flawed ways of looking at why a 401k and why people do that. And okay, it matches your 401k 6%. You know how many people we talk to that are putting 12, 15% of their income in 401ks and getting a 4, 6, 5, 6% match? I mean, why are they doing? So this is what we talk about when we look at the fundamentals of this and where our money is these little changes we can start making can make such a huge difference. We can take advantage of things like uninterrupted compounding interest and create a perpetual tailwind with our money and our finances for our family's future forever with little tiny changes. Like, so that's the money part. And then when we look at real estate, why real estate, right? And I mean, I could literally talk for hours on why real estate. I mean, it's one of my favorite things. just the basics of it, just the fact that, what is a flip, right? So I look at a house, I can see it's shitty. I can see it's falling down, or it needs work, or it needs a new kitchen, it needs updated, it needs paint on the walls, whatever. Like, I can look at it and know exactly what I need to do. I can know exactly what it's going to cost, and I can know exactly what that property will sell for after I do all that work. So I can control every single aspect of that real estate investment from start to finish and know exactly how much money I'm going to make. Now, do you always get it exactly right? No, but I have a pretty general, pretty close. I'm going to get pretty close every time, right? Now, a stock, you're investing in a company. Who's controlling that company? A CEO, a board of directors. I mean, think about like things like Enron. I mean, Walmart lost 10% overnight just because the economy's starting to turn. I have no control over that. There's nothing I can do for Walmart that's going to drive that price back up. So it's controlling your money. So when we look at real estate, and there's so many different strategies, no matter what the market's doing, there's different ways we can get into it. So I'd love to talk a little bit more about real estate in just a second, but I just want to set up why these are the pillars of education. And then, like I mentioned before, one other thing, Chris, and I'll let you get in, but one other thing that I said, solving your money problem. So we teach you how to take back control of your money and then solve your money problem. So think about that. Who has a money problem? Every single person ever in history. Why? Because everything's set up against us, for one. For two, financial education is never taught to us. So a lot of us just don't know this stuff. And number three, we're all in different positions right now. So what do I mean by that? You could be $500,000 in debt. You could be living paycheck to paycheck. You could be barely getting by. You could maybe, you're just getting started in life, so you don't have a lot of savings, but you're kind of at that point where you need to grow wealth. You need to start building wealth. You need to start accumulating more money, more assets, and you're in growth phase. Well, everything that we teach you will work for you. You can do wholesale real estate for very little to no of your own money, and you can start generating $5,000, $10,000 checks on a regular basis. At the training this weekend, we have one of the top wholesalers in the entire country coming to spend the weekend with us and train our students in Buffalo this weekend, Justin Colby. So just to give you an example, if you're on that side of the fence, we can teach you real estate strategies on how to start building your wealth and redirecting your money into things like privatized banking policies to create that perpetual tailwind and start solving your money problem. Or let's say you're on the other side of that fence where you have a bunch of money, you've done well in life, you have a great career, you saved up a bunch of money. Now you're just scared to death to lose it. You want to get it out of the stock market because you see what's going on, or you just don't know what to do with it. You're like, well, I can't go into stocks, I can't go into crypto. Like, I'm too busy with my job and my family and my career to go do real estate. Like, I don't want to flip houses. What the hell? How am I going to flip a house? Like, I don't have time to learn about that and do that. Well, guess what? We can teach you strategies, how to redirect your money, how to save on taxes, and how to start doing things like private money lending on real estate deals where your money's protected by assets, and you start generating a predictable, consistent income for the rest of your life. And if we start coupling that with privatized banking, with different retirement strategies, retirement account strategies, we can really start changing what you already have going on and improving your situation by doing one thing. And it's just understanding what our money's doing, where it is, and how to start redirecting that to other places first. So, and then all of that is obviously going to lead into the legacy aspect of it, which is what Chris said, of being able to teach this to kids, be able to create something special in life. No broke person ever created something special. I can tell you, money's, the root of all evil, and money doesn't create happiness. But at the end of the day, when you understand money and you understand it's just a tool to get you what you want, then all those little preconceived notions fall out of the window. And that's how you start getting the mindset that's going to allow you to do special things in life to create that legacy for yourself.
What I really want to do is I want to kind of debunk the myth about money and how it works. I want to show you very simply what you're doing wrong. I just want to show you, and listen, money is very simple. A lot of people are like, oh, no, it's not. It's very complicated. Money is very simple. But we've made it complicated because when you make something complicated, people don't want to do anything. It's so complicated. You use big words. Oh, the spread and all this stuff. You use big words and people are like, I have no idea what you're talking about. Like, who can help me with this? And then all the people come out of the woodwork. Oh, I'll help you. I'll help you. I'll help you. All these firms will help you. They want you to take the money that you work really hard for, because throughout your life, I can tell you exactly what it's going to be like. You're going to grow up. Eventually, you're going to get a job. You're going to then earn money when you make that job based on your skills or the certain rate that you choose you want, or they choose they're going to pay you. You make the money. And then when you make the money, you're going to put some of that money in savings, and that's going to either be a savings account at a traditional bank, or it's going to be a 401k or some retirement account. And then someday later, you're going to hope and pray that you retire. But what does retirement even mean? We don't even know. It's like a fictitious word. I mean, when you actually say the word retirement, what do you think of? See, to me, when I think of retirement, I think of $35,000 a month. I think of every single month without having to do anything. My principal never gets touched, and all that money just works for me. But see, retirement doesn't mean anything to me because I'll never retire because I don't believe the word is even true. But everybody has a different idea of it. A lot of people just think of retirement as like the day they get to stop working. Okay, well, what is it going to take for you to stop working? Have you ever thought about how much income will you need to stop working? Well, that's simple. Why don't you do a budget? How much do you spend every single month for your lifestyle that you live today? Great. Now you've got your baseline. Now, are you going to be able to earn that when you retire? And if you talk to advisors, the drawdown rate right now that's sustainable is about 3%. So you can take 3% of whatever the money is you have in your total retirement account. You guys want to do the math on that? It's going to take a really freaking big number in your 401k to provide you that income. Oh, but let's not forget there's some unknowns in there. What's inflation going to look like then? Are your dollars going to be weaker than they are today? Because my guess is yes, 100%. Secondarily, are your taxes going to be more then? Absolutely, positively, yes. Somebody's got to pay this shit back. Okay, so when you factor all that in, now that big pot of money that you need gets bigger and bigger. So what initially started as this was how much money you needed. Now all of a sudden, when you factor in the unknowns, that's how much money you need. And eventually people just zone out and they don't want to deal with that because all of a sudden that becomes an unfathomable, I'm saying it wrong, but an unattainable number. And when someone thinks something's not possible, they just ignore it. And you just go back to doing your mundane day-to-day stuff and you hope. Hope comes in. Hope's very powerful. But what if we never had to worry about any of what I just said? We never have to worry about how much money do we need? We never have to worry about all those things. Well, that is exactly what I'm talking about. Because here's where you're making the mistakes. Forget about doing it the traditional financial ways. I want you to, for just 2 seconds, I want you to think about forgetting everything you've learned about money. You no longer need to come up with some giant sum of money that you need and then do the math and figure out, okay, I'm going to only probably be able to sustain 3 or 4%, or I'll run out of money if I live till 90, 95. And then what about taxes? What about inflation? Oh God, I don't even know. You know, and then then all of a sudden, once you start going that path, you get so frustrated that you just say, all right, I just need an advisor. You get an advisor and they just say, okay, well, just give me all the money you have that you want to save and we'll take care of it all for you. And then all of a sudden you get your statement like you did end of last month. And you're like, whoa, gotten a lot of texts with people showing me their statements. How's yours looking? That's right. Probably not very good. You're anywhere between probably low side 16% down to a high of, well, if you're in tech, you could be as much as 60% down in some levels, but that's unlikely. But that's not the part of the story. The part of the story is, what if that went another 50% down? From where it is today, what if you lost another 50%? Because that's where we're probably going. I did the math on last week's wealth webinar and showed you. But instead of figuring out all that, what if we change the way we look at things, okay? What if instead of looking at how much money we have in this giant, box here, what if we didn't really need to focus on that? What if we just focused on how much money do you spend every month on things that you have bought? Like, in other words, how much is your car payment? Okay. So how much do you spend on your car every month? Let's just say it's $500 a month. How much are you paying on your mortgage? Okay. Let's just say that's $1,500. How much are you paying on that line of credit? Let's say that's $300. How much are the credit card bills that you're doing that you had the best intentions of paying off? Oh man, that's $700. Okay. So we start looking at all these different things, and it's not just your car, it's your wife's car or your husband's car. Okay. That's another 300. Oh, and then you have a kid. Oh yeah, you got to get the kid a car. Yep. So maybe that's another 400 because you wanted the safe car for them. You look at all these things, all this money right here, that's money that's leaving your family every month, and it will never come back. So when we're actually thinking about planning for retirement or planning an income or just planning for that day, I just hate the word retirement. It's literally like dragging your nails down a chalkboard. We always focus on this. which, because this is such a big number, for most of you, this number, just so you know, is probably $2 to $3 million. And I hope to God there's most of you on here that the number is actually more like 5 to 10 million. Now, where did I come up with those? The average person is going to need this much money just to retire with a meager income. Okay. The rest with a decent income are going to need that much money. And most people are like, I'll never, if any of you are thinking right now, I'll never have that much money in my lifetime. You're broken. Your mindset's broken. You need to change that. The answer is not, I'll never have that much money. The answer is, of course, I'll have that much money. But you got to start now. So if the biggest opportunity in your life is coming up, what's the game plan? First, we got to change how you view money. I just want you to, just for a second, and I'm not going to get deep into this, but I just want you to pretend this $500 car payment, this $1,500 mortgage, this $300 line of credit payment, the $700 credit card payment on all those credit cards, the $300 wife or husband's cards, the $400 child's car. And many of you probably have a lot more. Some of you have boat loans and furniture loans, and you guys have them, but let's just do these. So we got 2,000, 3,000, and 4, 5, 6, 7, $3,700 a month. Now, if I did the math wrong, I did that super quick. This is how much money every month you're giving away. What if you didn't have to give it away? What if that $3,700, what if today you started the process of changing one thing and changing who got those payments? It's not going to happen overnight. But let's say you said in 5 years, all of this money that I'm giving away is going to be money that goes into my bucket, my savings, my future fund. Okay. How much easier would it be for you to start obtaining your goals if you weren't leaking? What if none of this leaked your household and all of this just automatically went here? Would that change anything in your life? Many of you are thinking, of course it would change everything in my life. No, no, no. Would it change anything in your life? Are you not already paying those payments today? Those are going already, right? You already know how much you got to work. You know how much you got to make. You know everything that goes around this because you're already doing this today. It's exactly how much you're giving away. So in order to really fathom this happening, if that money went over here, it required no more work. You didn't have to work longer, harder, or take on any risk because you're already doing that. You just changed who got the money. This is absolutely possible. Do you know why I know it's possible? Because I did it. You know how I learned how to do it? Because somebody else before me did it. Do you know how I know it will work for you? Yes, because it's worked for thousands of other people under our direction where we've helped people do this. This isn't hard. This just involves you changing your mindset. You know what this is? Forget about money. This is your bank. And yes, your bank has your money in it. How much? 3 to 4 or 2 to 3, 5 to 10, doesn't matter. Like that's just a number, but your goal of getting there would be so much easier if all the money you give away on the debts that you have, the principal and interest payments, all went back to your bank. If on top of that, every bit of extra work that you did, the extra hours, the overtime, okay, maybe you found yourself a good investment opportunity in a year when the market's down 50% from where it's at now. Everything is going on sale, so it won't be hard. It'll be like walking into Walmart on one of the double rollback days. Everything's on sale. I don't know. Is that how Walmart works? But I'm just pretending. If everything's on sale, then you'd be able to just pick things that you know, like, and understand and invest in them. If we already had a huge tailwind of money you're giving away going in here, any new monies then could be going to opportunities. And those opportunities can make you, I don't know, 5, 10, 20% return. Maybe those opportunities are a business that then turns you into a multi-millionaire. But if you don't start focusing on the opposite of what everybody gets you to try to focus on, nothing will ever change. Here's what will happen if you keep doing what most people are doing today. Here's what your finances will look like. And some of you are looking at this saying, well, it does at least go up in a line. Yeah, let's just say this is 20 years of your life. Felt like you're on top of the world here. You weren't feeling so good there. Top of the world again, down in the dumps. Top of the world, ready to drive your car off a cliff. Not really top of the world, but getting better. Holy crap. That probably was a divorce and a lot of other things that happened there. You may be now living in an apartment. You get what I'm saying? Like, was that a fun ride? Not at all. Who's ridden this roller coaster? I have. And I bet you a bunch of you have. It's an emotional distress. It's just a terrible feeling. The number one cause of divorce is money problems. You ever think about that? That's a problem. This is the money problem that most people face. Do you know what causes this? Listening to what everybody tells you to do with your money, conforming and giving up control. Because the way I see money today doesn't look like this. Okay, I'm not going to lie and say that it doesn't have some ups and downs, because some things go bad, but my dollars kind of do this. And yes, sometimes I have big wins, sometimes I have little losses, but I'm in control of those losses. So when this loss happens right here, that was because I screwed up. Not because Wall Street screwed up, not because something out of my control, because I screwed up. I got lazy. I started maybe seeking unrealistic returns, something. And why does my line start going up really fast? And also, this isn't a 20-year line anymore. Let's say this is a 10-year line. The reason for this is my money never stops working for me. It doesn't matter what I buy. Here, I take money out to buy a car. Here, I take money out to buy a vacation home. Here, I buy a boat. I'll never own a boat, just for the record. Here, I buy a jet. Here, I don't know, I'm just making stuff up. Every time I take money out for one of these things, my money never stops earning interest because it never left my account. All these things actually, instead of being purchases that cost me money, become things that actually make me money. My car payment, and I'll be transparent. Like I just figured this out the other day. My new vehicle that's going to be coming soon was going to be $2,200 a month, and then my wife's vehicle is $1,100 a month. Okay. Now, most people would gawk at those and be like, you're absolutely out of your mind. Like, why would you ever do that? Okay. Well, do you know why? This $2,200 and this $1,100, you know where those payments go? Because they don't go to M&T Bank. They don't go to Wells Fargo. They go to my bank. Now, not everybody can, from a cash flow standpoint, afford this, but I didn't start here. You know where I started? You guys have seen the video. It wasn't a $2,200 car payment. It was about a, $320 car payment. Over time, it's evolved, and now it is $2,200. So I'm just being transparent. And the only reason I'm saying this, not to brag, I'm just simply saying when the money, this that you are used to spending, no longer becomes spending, and this money becomes saving, that becomes your savings, the game changes. Because your bank just keeps getting fuller and fuller and fuller, and you didn't do anything different besides what you're doing now. You changed who got the payments. So now let me give you the bad news. This takes time. My story, what I'm telling you here, didn't happen overnight. And I don't own a boat, and I don't have a jet yet, but I got friends with planes, so we're good there. Do have vacation homes, and all these things pay me. On top of that, I still invest money. I buy US Treasury bonds. I bought I-bonds, the inflation protected securities. I lend a ton of money through private money clubs, something that all of you need to learn about. Because all of these things are things that I know, like, and understand. I mean, come on. Who doesn't like nice cars? Okay. Who wouldn't love to have a vacation home? I mean, let's just put the boat back up. Who wouldn't love a boat? Who wouldn't love to be able to, fly their own jet? I don't know. I could add more things there, but I mean, those are things that you like or love. You probably know them because when you buy a car, you research a car, you find out, is it safe? Is it what I want? You know, like, and understand them. It's very easy to know, like, and understand things that benefit you personally and that you enjoy. And when those things you know, like, and understand all feed your bank, everything starts to change. The question is, are you willing to change that? This morning, Stephen and I were doing our show, the What the F Happened show. And, like normal, I should have worn my haters need hug hat, but people were on fire today. We had TikTok going, and I was just explaining to people what the wealthy do with money. I was talking about the Rockefellers, the Rothschilds. We talked about John F. Kennedy. We talked about McCain. We talked about Biden, how they fund their political campaigns. We talked about a whole bunch of wealthy families. And then I just said, the thing is none of these families have to worry about the things we do. Like the money that they have, the bulk of their money isn't reportable. They don't report it at the end of the year. People don't even know they have it. It's protected. It's private. And then I just went through. I said, not only that, it's in a tax-free environment. They don't pay tax on that money, on the growth in that money. Then I said, if anything ever happens and they need the money, they can just take the money out. No one's asking questions. They don't fill out any additional forms. They click a button and they get the money. I said the money grows at a guaranteed interest rate that's probably three times what you're earning in your bank now, your traditional bank. And I just kept going on and on. You could just feel it. Like everybody's getting energized. Oh my God, that would be awesome. Oh my God, that sounds too good to be true. Oh my God, oh my God, oh my God, oh my God. And then after that, I told them what that privatized banking policy was. Told them, what is that? People were asking, oh, what is this? I said, it's a specially designed and engineered whole life. It's like a car slamming the brakes on. And then all of a sudden, when they slammed the brakes on, all those people that were super excited about what I was telling them, which were all factual things, said, oh, that's terrible. That's the worst place you could. Oh, this guy's probably licensed selling. See, he's selling. The total mood of that entire thing just changed. And it was hard to get it back. Oh, you should be buying term insurance. Oh, whole life's a terrible place. Oh, whole life's expensive. And it just went on and on and on. I'm not saying any of those people were incorrect, but they didn't understand how we use whole life because they just heard one word, whole life, something that's been bastardized their whole life from upbringing, so from their parents, their grandparents. Dave Ramsey did a good job of, sending them down the deep end, and Susie Orman helped on that, and everybody just made them bastardize this thing, whole life. But if I were to ask them, do you even understand how a whole life works? They couldn't tell me. They couldn't tell me. They could just tell me all the lies they've been taught. Not even lies, but they've just, the preconceived notions. And then I gave them Will Rogers' quote. The biggest problem in America is not what people don't know. It's what they think they know that just ain't so. But you see, people are so negatively conditioned about money and how things work that they, as soon as a new idea comes in, even though I planted the seed, I told them all the things that they could get and they loved it. As soon as they got the answer, they went to emotion. All the logic that they could have had, like the logic that would say, well, this could be possible. Why would all these wealthy families use it? Logic went straight out the window in a matter of 30, not even 30 seconds, two seconds. And all of a sudden emotion kicked in and it was just an emotional roller coaster ride. So that's the problem that I posed to you. Can you think logically when it comes to money? Or are you always going to think emotionally like 93% of the population? 93% of the population makes emotional decisions with their money, which is why they lose money more times than they make money. Logical thinkers that just sit back and just think, all right, well, what would be logical with this? And they do some research and they say, well, okay, maybe that is what it is. Maybe I just haven't learned that. But then when people say that, I love it. Well, why haven't I learned this? I'm glad you asked. I was on the phone with an advisor, okay, that just got a hold of me today. And he's got high net worth clients. He's a traditional advisor. He sells IULs. That's all he talked about. And he says, and I want you guys to help my clients with this infinite banking thing. And I just asked him, I said, tell me what infinite banking is. And he did a terrible job. He got it kind of a little bit, but he did a terrible job of explaining what it was. But he thought he knew what he didn't know. And even when I told him what it was, it just didn't seem like he wanted to learn it. He's just like, oh, yeah. Listen, I get it. It's hard to change 20, 30, 40, 50, 60, all of you are different ages. It's hard to change all that preconditioning that you've got in your whole life. It's almost impossible. But I did it. Stephen did it. Over 5,000 of our clients have done it. Why can't you? You just got to start using logic instead of emotion. And you got to start understanding that everything that you see in the front line, everything that you hear, sometimes isn't the whole truth. When you hear whole life and you hear that it's bad, okay, why? Ask people, why is it bad? Oh, it's expensive, okay? And then you just get all the rebuttals and you say, well, how about the expensive part? What's expensive about it? Oh, it's just expensive. They don't even know why it's expensive. And it's not expensive. Cost is only an issue in the absence of value, but they think it's expensive because someone told them it was. Well, the cost of insurance is where the expense comes from, right? So what if we take the cost of insurance or the death benefit where all the cost is and we reduce it down to the absolute lowest point? Now it's not very expensive anymore. And then what if what we needed was term insurance in there, what you think is the best insurance? What if we just put that inside this to make the insurance go back, or the death benefit go back up to support the rules? Now all of a sudden we've done exactly what you want, but now all of a sudden we've got a vehicle that allows you to do all those things that I was telling you that you loved. You see, people can't even understand why they think the way they do. They've never even given any thought to why their thought process is. It's just preconditioning. You've been conditioned your whole life to learn lies about money. Now, let me throw another example to you, okay? Totally outside the realm of what we're talking about here, but real estate. What if I told you that in real estate, to make a whole bunch of money, you never needed to own the real estate? What if I told you you could be in full control of every aspect of your investment in real estate, but you never need to go to the property, you never need to actually call or do anything with the property, you never need to do anything with it at all, but you control 100% of it? And what if I told you that you earned all the money on it? but you never had to lift a finger to do it. Right off the bat, you'd say that sounds too good to be true. But is it? It's really not. You can own nothing but control everything if you know how to do it. And we've got somebody on here who's going to be joining us this weekend for our training, our money school event that we're doing, which right now the in-person events sold out. Okay, but you all can join us virtually. So we'll put a link up for the virtual tickets. You all should join us. It's going to be 2 days of unbelievable stuff, going deeper into what I started to lay the foundation for. But Kevin Shortell is somebody that we've come to really, really admire what he does. He's been doing it for a very long time. And it's a totally different spin of using something we love called real estate, but getting rid of all the shit that we hate. Like, I hate dealing with tenants. I hate it when I get calls that termites ate through the porch. I hate it when I get calls saying the toilet's overflowing and I'm not going to do anything about it. You got to figure this out. I hate when the tenant calls and said, I'm not paying rent because you didn't do this or you didn't do that, or I just don't want to pay you. And the government said, I don't have to pay you. What if none of that mattered? What if all you had to do is just be like, sit back and collect checks? Let me just remove myself from that and have Kevin tell you a little bit more about how that's actually reality.
Hey, Chris. Hey, Steven. Hey, everybody. Glad to be here. Sorry I jumped on a little late. I was working on a deal. So you're absolutely right. And it follows along the same theme as what you were just saying, which is be the bank, have your own bank. And the way that I look at real estate on the financial side of the business, that's what it enables you to do, to be the bank in real estate. And when you think about it, using that same analogy, if you have a loan on your property right now, you're mailing a check to the bank every month. Are you calling them for anything? I mean, are you calling them because the toilet's overflowing, the roof is leaking, you got tenants who moved out on your rental property? Nope. You're just sending them the check. And that's the position that we put ourselves in. And even on the instances where there's late checks or people fall behind on payments, we have a buffer in there through servicing companies and workout companies that handle all those situations for us. And I think, and part of the focus in what, and I'm excited to be up to Buffalo to be with you guys in person, and we're going to have a good time, and everybody who's joining us virtually is going to enjoy it as well. But I've been focusing quite a bit on the economy and how it's affecting real estate, how it's affecting real estate notes. And I got to tell you, I'm more and more convinced that this go round in the market change as it pertains to real estate, the note side of it is just the best position than I've can see any other place in real estate right now. There'll be others that'll have some spins. They'll have some other things that are good niches within real estate. But overall, I would say having notes is at least a part of what you're doing. It just makes complete sense.
I think it makes all the sense in the world. And it's funny, like I was just commenting here. Dylan was just saying, closing on my first note partial this week. That's another cool thing. So, like, yeah, you know who Dylan is. One of the cool things about what Kevin teaches is, a lot of people think, oh my God, I got to have all this money to invest in real estate. What if they only had 10 grand, 20 grand? I mean, hey, everybody's at a different stage in their life. You might be young and you're like, hey, I've saved up 10 grand and I know it doesn't seem like enough. Can I do something? What's the answer to that?
Yeah, in fact, I show people a technique where you can actually invest in a note for as little as $100 and get all of the return tax-free. And that's obviously involving retirement type of accounts, but it involves this concept that Dylan was talking about of partials here. So we have people that buy partials. We have people that are selling partials right now. So it's a really good mix on that. And I'll tell you what it does overall. It lowers the risk for the investor buying the partial, and they still get the returns that we're used to in the note business, which is a great combination. And if you're on the selling side of it, which I have more people selling partials right now because they're raising some capital, right? And all they have to do is sell X number of payments and they get the lump sum that they're looking for other investments or for whatever it is that they need it for.
Well, I think that's the coolest part is right now, everybody's, kind of thinking, all right, well, if this opportunity is coming, if real estate's really going to go down, if stocks are really going to go down, I kind of got to have some money liquid. And where's all my money? And a lot of people, their money's out working because they got scared when inflation got really hot and heavy, like not that it's not now. So they didn't want cash. They deployed cash. But you've got some people now reeling some of that cash in, getting ready for the next phase of the opportunity. I think that's fantastic. So the liquidity aspect is right there. And I think that's an important thing for people. I don't think a lot of people right now are super comfortable putting money into something on a hope that it's going to make money, but then they don't have any liquidity. Like they can't just get their money back. I know I feel that way. I don't like putting my money out there when I can't get it back. I want access, or I want at least some way to get out of it. That's why I love treasury bonds. It's the most liquid investment on earth. They're
Right.
boring. They're, most people don't even love them, but you know what? Like if I need to sell those suckers, boom, gone.
Exactly.
Forever. There will be a marketplace for those. So not saying that's right for everybody, but it's right for me. And notes are probably right for more of you than less of you. I can tell you that, no matter what stage you're at. You have a lot of money, notes are great. It's a great diversification. It's a great way where you can take some of your money, split it off, and have a different exposure to a different risk on a much lower risk scale. And for others, like maybe you're just starting and you want to move a little bit of money. I mean, you just said it, $100. It's phenomenal.
Yeah. The
And
liquidity. Oh, sorry. You're right. The liquidity in the market, that is one thing that has dramatically changed since I started in the business over 30 years ago. 30 years ago, it was harder to buy them. It was definitely harder to sell them because it was just such a small niche. And today, with new laws and with technology, that the note industry has grown to its own asset class, and it really should be a part of everybody's portfolio. I'm not anti-stock and bond. I'm not anti-treasury bills, anti-real estate, anti-rentals, whatever. But I think when you look at all of the investments across the spectrums, I think notes have to be a part of that today. And I can't think of a single client, because you think of liquidity, but you also look at safety because people are concerned about the future. I can't think of a single client of mine that couldn't easily, without having any impact, endure a 20% drop in real estate prices right now. Probably most of them as low as a 40% drop in real estate wouldn't affect them one little bit. And a lot of real estate investors can't really say that, depending upon when they got into the marketplace. So it has some interesting aspects to it.
Kevin, let me go one more round, because this is where we were going to go, Stephen and I. And Stephen, this is my favorite thing, and a lot of people don't see this, but we've already talked about what's potentially coming. Real estate values are already coming off of their highs, and how low can they go is what a lot of people are asking. But the other thing that's going to happen in every recession or period or any other market drop period is layoffs. You're seeing it at the highest levels. You're seeing, every big company, especially techs, they're laying people off. They're not, they're hiring freeze. They're doing hiring freezes. Like, these are all signs. So when this whole thing happens, like, I don't mean to be, negative Nelly here, but some of you are going to lose your jobs. Some of the people, your coworkers, your friends, your family, they're going to lose their jobs. It's just a fact of reality. It might be the best thing that ever happened to them. Maybe they hate their job and it opens the door for another opportunity, like it has for many of us. But when they lose their jobs, the one thing they're going to have to do is go pack their office up. They got to go in, if they still have an office. COVID changed that a little, but they got to take their belongings out, grab their stapler, grab their picture of their family, and waltz out with the box. We've all had to do that. It's a humbling experience, but we'll do it anyway. But money in their 401k oftentimes is left. And I never understand that. That should be the first thing. If I was getting laid off or fired, I'd be like, okay, so how do I get my money out of this company's 401k? Oh, well, they're not going to have answers, but take your money too. Don't ever leave the swing line stapler. We watched that movie, but also don't leave your money. And I love it that Tammy was just talking on here on how, she probably had a situation trying to find it. She just moved her old employer 403B, which is just like a 401k for nonprofits. And she moved it into a self-directed IRA. Right. Now that she's in a self-directed IRA, the one cool thing about Tammy is she now is in full control of that money. She wasn't in control of it in the 403B. She had a small basket of mutual funds probably to invest in. Now is the universe to invest in. So when she comes to the event this weekend, she's like, listen, I can't wait to learn more about note investing, because that might be something I want to deploy some capital. And folks, a lot of new money is going to change hands. Money never disappears. It might seem like you watch it on my statement, I'm down 20%. The money didn't disappear. It just changed hands. If you're down 20, someone's up 20. I know that seems crazy to understand, but that's really what happens. Somebody loses 20%, another person just made 20%. When this whole shift happens, a lot of money is going to shift places. And you will have to probably make some of those decisions. I urge you to look into self-directed IRAs, because it's going to give you the ability to do the whole universe of things, much like what Kevin's talking about.
Yeah, I totally agree. Those accounts can be absolute game changers. And when you talk about layoffs and things like that as well, on the other side, one of the things that I'm preparing for too for my people is 100% agree with what you're saying. Too many people have just left their money there and go, well, I guess it's just there and I'll get it sometime. You're right. So do that. But if you're on the other end and you're investing, there's a couple of layers here of protection. I focus a lot on affordable type of housing, which depending upon you live, where you live, that price of properties can vary. But a lot of people don't know that the government has already put aside $10 billion to help people who fall behind on their mortgages. And that money has already been distributed throughout the United States. The money is already starting to be spent. And that's going to be a great place to help people. The money pays directly to the note investor themselves. So imagine that your IRA or 401k that you're self-directing buys one of these assets. You're helping somebody stay in their home. You're being paid directly from the state through federal funds to catch them up on their loan, possibly even make their mortgage payment for them for the next year and a half to come. That money will be spent. It's already been allocated to every state, got a portion of it. So there's a lot of different layers on this that I'm getting people prepared for.
You all have seen that movie, you know, excuse me, you have my stapler. Don't leave your money, like leave the stapler, take your money. Milton had to learn some hard lessons after that. Don't be Milton. I don't know. That would have played off much better if technology worked in our favor. But Kevin, I'm super pumped. When do you actually get in?
I'm coming in Thursday. So I wanted to get up there and maybe have a little fun and go up to Niagara Falls. I haven't been up there in a long time, and get there early, get ready. And I'll be with you all in the VIPs Friday night, watching a little baseball. So I'm looking forward to that. And I'll be on, I think, first thing Saturday morning, 10 o'clock.
Absolutely. Yeah, it's gonna be the weather's fantastic. You know, if anyone lives in hot states like Arizona, like this, you're gonna be in love. You might never want to leave, but believe me, like a couple short months, it's not so nice unless you're a snowboarder skier. But right now, it's fantastic. So, Kevin, looking forward to seeing you, man. We can't wait, and see you in a day.
Good. I'll be there and have plenty of time to stick around and meet everybody, and I hope to do so. So thanks. Enjoy the rest of the webinar.
I appreciate it.
Awesome. See you tomorrow, Kevin.
All right, Stephen. So one question that came up that I saw on here is, you know, I saw a question about dump-ins, and we get this question all the time. I believe it was Sheila, right? She was asking about dump-ins. Can you explain how you can front-end load the banking policy, which is a specially designed whole life? For those of us who are a little older, I know some about life insurance, and I don't understand why or how you can do this. Okay, so just let me make it that simple. What she's asking is, you know, a lot of times, if you ask a normal advisor, like, you know, if you would have asked me back when I was an advisor, hey, can I take and dump 100? I got 100 grand, and I'm just using round numbers, just make your number whatever. I got 100 grand in my savings. Can I dump that 100 grand into that specially designed and engineered whole life? So, and then also add one thing, and I don't want it. I don't want the policy to mech. Most people would say, well, the first thing they would say is probably not. You can't just dump 100 grand in and put it, you know, put that into the policy and not create a mech, because there's rules, IRS rules. Remember, any dollars. So this money right here, if it's in a savings account, a brokerage account, this is taxable money, which means whatever you make, if you make $5,000, that is taxable. And as soon as that money changes where it goes and ends up inside the life insurance, the whole life, now you got 100K in here. Now we know, depending on the carrier, you're going to make 5.2 to 6% with today's dividends, which are the lowest in over 30 years. We know that this is now tax-free. So of course, the IRS doesn't want to take taxable dollars and move it into tax-free dollars. So they put some rules called MEC 7 pay rules. So the thing that we often do, and we've gotten very good at this, no matter how old you are, if you're above, what do you think, say 65, it gets a little tricky. 65 to 67, anything north of that, it gets a little bit trickier, but we still can pull it off, and we have. And I don't know if Claire's on today, but she's usually a perfect testimonial, because she's definitely one that is actively doing this. But we can dump in 100 grand. But then let's just say somebody puts 100 grand in, they might not want to put 100 grand in. I got 100 grand and I want to put that in, but next year I can't do 100 grand. And then we just say to them, well, how much do you want to put in next year? I don't know, maybe I'd like to have the ability to put 15,000, but I don't know if I'm going to be able to do that forever. Stephen, what is, can you do 40%? Let me just do some quick math so I can actually use real numbers here. So let's just say we needed a spread, 15 to 6,000. So this person might say, I got 100 grand, I want to dump 100 grand in, but each year I want the ability to put 15,000 in, but I might not be able to do that forever. So what if the lowest part is 6,000? That's the lowest you can ever put in for a period of 10 years. Is this something that you're comfortable with? You know, come hell and high water, you lose your job. Can you still save $6,000? If the answer is yes, then this is how we would build it. And it would never mac, because the way that we're going to design this is we're going to basically design it so that it can't mac. But if this is the mac line, let's say the mac line is 116,000, we're building this policy to hold 115. We're literally $1,000 underneath the IRS rules, which makes this policy incredibly efficient the way we build it. So there's a lot that goes into this. This is not easy. Ask your advisor to try to do this. I bet you any money they'll get so damn frustrated. They'll go to their consultants inside their company. Their consultants won't be able to figure it out. That's not possible. There's no way you can do that. We do it every day. But I bet you any money they would tell you they can't, because they can't figure out how to do it. Actually, it's not that they can't figure out how to do it. Here's what they don't want to give up. They don't want to do it because they don't want to give up. To do this, you're going to give up about 90% of your commission. Who wants to give up 90% of their income? So Sheila, I didn't want to go too deep into that, but like a lot of times this is the reason why people don't understand this or don't want to understand this. Who wants to give up 90% of the income you would make? You do, Stephen?
Yeah, I do it every day.
Yeah, exactly. This is what we do every day. I love that answer. But that's what it takes, like, to build this thing. You're going to give up anywhere between 60 to 90%, depending on the design. And it seems like the majority of them we're doing are between 80 and 90%. No ifs, ands, or buts about that one. We've just had to get really good at picking up nickels and pennies on a lot of people and helping them solve their money problems, because otherwise the average person couldn't live on that. You know, if you made 100 grand a year as an advisor and now all of a sudden you got to take a 90% pay cut because you support your family, no. And you can't fault them for that. So how would you support your family? Help more people, solve more problems, do more, help more. But you can't do it if you're your traditional model. Most advisors can't get out of that mindset at all. They can't understand that. And that's where the problem is. But Sheila, hopefully that helps. That's how you can do it. And that's how we do it every day.
I just wanted to share the page real fast just to show. So we had Kevin Shortell on just now. You know, we were talking about real estate earlier, and you know, note investing is just one little portion of real estate investing. But times like now, it can be a very important strategy, you know, to have part of your portfolio. And depending on what's going on, like he said, right now, the government just released those millions and millions of dollars to help people with these. You can take advantage of different programs like that to really do some neat things in note investing. But there's so many different areas. So I just want to pull up the site. So this is the for anybody that's buying tickets right now, the virtual site. This is where you'll go to. This is moneyschoolrei.com/July-event. And it'll pull the site up. But I just want to highlight a couple of the other people that we have coming on real fast. So you can kind of see the schedule on here. It's Saturday and Sunday, 10 to 5 Eastern time. Again, we do record the entire thing, so you'll get the recordings. The in-person sold out, so we do have the virtual available. And so just give me an idea, you know, Kevin's there, myself, Chris, Spencer Montgomery. So you know Spencer a little bit better than I do, Chris. It'll be my first time meeting him in person. But just tell us a little bit about Spencer, if you don't mind.
So I met Spencer at a mastermind out in Utah. And, you know, at that point, like I was kind of on the more negative side of crypto investing, because it just seemed like every person that was talking about crypto or trying to teach crypto had a hidden agenda of like, buy my coaching thing or do this or give me your money and I'll invest it in crypto. I had people walking in the door here at our office. This one guy wouldn't even leave me alone, walking in, trying to convince me that I should give this guy that he knew who was a wizard in crypto my money and he would invest it in crypto. I'm just like, you're out of your mind. And Spencer stands up, you know, and he's the crypto guy in the room, like multi-millionaire. And he starts talking about crypto, and there was no sales pitch. There was nothing. He was just explaining, here's what I did. Here's my background. Here's how I've done it. This is how I continue to plan to do it. And it was so different than what I'd ever heard that I sat down with him after and I said, hey, listen, I said, do you teach like people about the fundamentals of Bitcoin? Because he only does Bitcoin and Ethereum. He doesn't want to hear about all those shit coins. And he said, I do. And I'm thinking, oh, this is going to be one of these big things. And he says, but here's how I do it. And he goes through a process and he explains it. And I'm like, well, that makes all the sense in the world. How much is it? And he tells me the price. And I'm like, I wanted to say, damn, dude, really? That's all you charge? Like, you should charge. I almost want to say you should charge more, but I didn't. And then we brought him on one of the events and he did such an amazing job, but it wasn't the job he did at the event. It was the feedback I got. People worked with him. They went through his program and I just got people just raving about it. And he didn't teach them how to put large chunks of money. He taught them how to dollar cost average into it, how to build a portfolio in crypto, never to be, he usually says never more than 10%, or actually, I think he doesn't say 10%. He says money that you can afford to lose. And he shows you how to do it slowly over time and how that's advantageous over doing it in all one shot, because if you get excited and you let emotions do it. So that's Spencer. He's phenomenal at what he does. He's a very likable guy because he's not trying to sit there and pitch and sell you something. And I just hate people that like try to pitch and sell you something. I'm always like, I just want to learn. Just teach me, man. Teach me. And if I like what you're saying, I'm going to ask you to help me. It just seems more natural. And I think all the speakers that we have, although they all have something to sell, I'm sure, they all want you to learn and they want to give. And if then you you want to work with them, like Kevin, like, of course, you're going to want to do notes, then like ask him to help you. Of course, they got programs, but like they don't have to get up on a stage and pitch it. They just have to teach it. And then people will come and say, hey, can you help me do this? And of course they will. And he's helped me. He's the reason I don't have a big crypto portfolio. I have Bitcoin and Ethereum, the only two, maybe 40 grand worth. And all I do is just slowly every single week, I put a little bit in. My wife doesn't get mad saying, hey, honey, where'd all that money go? It's like $200 a week. She doesn't even know it goes anywhere. And I just keep buying it down. And then when it gets real low, yes, I put chunks in. And he taught me everything I know about it.
Yeah, man, it's fascinating stuff. I mean, crypto, I definitely think is going to be around for a while and part of the future for sure. So, Justin Colby, I mentioned earlier, one of the top wholesalers in the country, and has just an unbelievable program and style for teaching and educating. So that'll be a lot of fun. Greg Hurling, I mean, what can you say about Greg?
He's my mentor. He's the first person in my life that literally sat me down and said, the ultimate, Chris, in real estate is being the bank. I had no idea what it meant. I knew he was incredibly wealthy at a young age, and I didn't know how he got there, but he has become not only just a dear friend, he's also become a business partner and so much more. I've learned tremendous amounts from him, and I'm honored that he's coming to speak.
Yeah, Greg is a rock star, absolute stud, and he doesn't go to live events very often. So
he doesn't need to.
Right. It's pretty rare. So anyone that's going to be there in person, you're in for a treat. And then of course, Devin Burr. I mean, this guy right here, if you guys are on TikTok or Instagram, go find Mr. Burr, BRRRR, Devin Burr, and follow him. And he's just he and his wife just do unbelievable things, use stuff that he's taught us, Chris, about banking and how to use that with real estate deals and following the Burr method. So Devin will be there all weekend talking about
one of the people using the infinite banking concept for real estate, I think, better and more than anybody else.
Yeah. And he's another guy that's just very good at explaining it in a way that anybody can understand it and do the exact same thing. So, and then of course the legend himself, Brent Kessler, will be there all weekend as well. And then we have a couple other special guests that are going to be there that I'm not going to surprise anybody, ruin the surprise, but we do have some special guests that are going to be making appearances this weekend also. So it's just going to be an incredibly fun time. I could go over a little bit more about what all different topics we're going to be teaching, but I think you're starting to get a feel for how powerful this weekend's going to be. And the best part is, what's a ticket, like $300 or something, Chris?
Yeah, I think so. I think they're 300 or, let's see.
Virtual.
The virtuals are 197. The 300 was the general admission, which we're sold out on.
Oh, right. Okay. Yeah. So $200. So you get all of that the entire weekend. And by the way, all of those trainers, all of those speakers, all of those experts that I was just telling you guys about, as soon as they come off stage at the main event, they're going to walk over into a little podcast room that we have set up exclusive for the virtual audience. So the virtual audience is going to have an opportunity to ask questions, and I'm going to be interviewing the speaker with you guys. So that way you can kind of pick their brains a little bit and get to know them a little bit, even though you're not in person with them. We're virtually going to do that exclusively for the virtual crowd. So that's going to be pretty cool too, I think. So you guys are going to get to meet all of them also during these 2 days. And again, if you got to step away for a little bit or miss one of the days, we do record the entire thing and send those right over to you. And it's really neat how we do the recording. Shauna does a great job. She actually timestamps each area. So, hey man, I really liked, you're there in person and or you're watching virtually and you're like, you love what Kevin has to say, or you love what Spencer's talking about with crypto. And you're like, God, I wish I could see that again. Well, you could get the recording and we timestamp exactly when they spoke. So you can go right to that section of the video and you have it all right there for you. So we make it very convenient and you can keep those recordings for forever. So you'll have those to always refer back to and learn more from in the future also.
I also want to point out Lawanda on here, and this is awesome. I'm only going to call this out because this is the company I worked for 14 years, New York Life. She said, when we're getting back to the privatized banking, the whole life, she said exactly, New York Life was asking, what am I doing setting up policies like this? They were asking that because they knew that she was giving her commission up, like literally sabotaging her paycheck so that her clients got more money. That's a no-no in the Wall Street and insurance world. Why would you ever do that? Well, there you go. And then Steve was saying, like we get this a lot, Steve. A lot of people like don't have jobs right now, but they got a bunch of money because they had a windfall. Well, we've got people all the time that want to turn an income on based on a chunk of money. Because I mean, really, what good does it do anyone? And I'm just going to pick a number. I don't know, Steve, if this is your number, but let's say somebody's got $1 million. Okay, but you got no job. Let's say you got no job and you got no income. Let me ask you this. Does this $1 million do you any good? Some of you are saying, well, yeah, if I needed money, I'd just take money out. How long would it be before you're broke? I bet you I'll give you 5 to 10 years max before you're dead broke and all your money's gone. But what we have people all the time do, and it's through lots of different sources, doesn't matter if this money's qualified or non-qualified. We can show you how to convert this into income. But the best part about what we do is, unlike the way I did it as an advisor, which was usually a mix of, well, here's your gains, your dividends, and then also here's some of your principal. So you're always drawing down a principal. The way we do it today is let's not touch the $1 million. Let's leave that for an opportunity fund. Let's leave that so that someday the children can have that money to go out and do something. Let's just play off of house money. And we turn that $1 million into an income stream. So how much would that $1 million earn in an income stream through the ways we do it? $100,000 to $120,000. So if you had $1 million, could you live on $100,000 to $120,000? The answer is yours. I don't know. But what if we never touched this? That sound better? Yeah. And if you needed more than 100, 120, well, then, yeah, you could go to principal or you could just seek a better deal over here. That's how it works. And just so you all know, that's Private Money Club. Secured first position lending deals on real estate. Could also be notes. I know Kevin's got notes all day long that pay 10 to 12%. Could be any of the things we do. But like a lot of times people have this, they have money, but they don't have income and they don't know how to bring the two together to solve that problem. And that's what we're really good at. It's just not your traditional way. One other piece of advice I would give everybody is stop listening to other people tell you what things should be. I think the biggest thing that held me back is I was always listening to other people. People in your life will always tell you that's a dumb idea, that's stupid. I remember when we started money school, I can't tell you how many people said that's dumb. Nobody's going to do that. Well, I don't know, maybe not. Everything. When you're writing a book, everybody knows you don't make money on books, or at least they should. Everybody's like, why would you spend all this time and energy and money to write a book? Because books don't write themselves, and they also don't publish themselves. It takes money. Why would you do that? Well, again, when you're writing a book, it's like your business card. It's the ultimate business card. So a lot of the things we do in life, we just have to do because it opens a door to the next step. And a lot of people don't understand that because listen, every contractor that works for us with our flipping houses, they do a job, they want a paycheck right there. They're never thinking that the job they did could open the door for much bigger things. They just if I do this job, I make this much. And then tomorrow I'm doing another job, which I make this much. And then guess what they do? They spend almost all of that money. I don't know what it is with contractors, but that's just the nature of how they work. But imagine now, what if they did a job, but they didn't think just of what they're making on that job? What if they did a job because they knew that the person they were working for had a much bigger opportunity? And if they did a good job for that job, or they did a good job on this small little job that maybe pays them $2,000, but they don't focus on the $2,000, they focus on just the experience and the quality and everything. because they know that the big job that could come if they did a good job there is worth $2 million. Would any of you care about $2,000 if there was a $2 million opportunity, if all you had to do is do a really good job on the first one? None of you would, but they don't think that way. And maybe that's a bad analogy, but like, just think of all the things in life that people do. They do it because they want the reward immediately. We got contractors that'll do a job. They put us off for months. And then the second the job's done, they're like, hey, can I come pick up cash? Cash? Who the hell pays you in cash? Oh, I only do cash. And when can I come by? I don't know. Let me call my bookkeeper and ask her when she can wire some cash to you. Like, it's just like, it's weird. But you just got to get out of the idea that sometimes, like the things you do, like look at what we do. $387 is the commission we make on a $10,000 premium deposit into these policies. You know, and I'm just picking on one carrier. Like most people would be like, I can't live on that. That'll never work. And they do the math. But what if you did that times 1,000 people? What if you did that times 2,000 people, 3,000, 4,000, 5,000? Would you care about the $387? Or I should say, would you care about whatever the difference is between 5,500 and 387? It's a big difference. Like, would you care that you gave up that much if you had the opportunity to have 5,000 people that you're helping that each, you know, you earn 387? But that's not the way it works. Most people would focus on 387 or 5,500, 387 or 5,500. 5,500 means the client loses out on the difference. 387 means the client gets the difference. Which way would most people go? 5,500, because they're playing the short game. But if you did the 387, that person is going to be so happy they're going to tell the next person. And then that next person is going to tell the next person. And then all of a sudden, one person is going to invite you to speak at an event of 20 people, and maybe 10 of them start with you. Then you got 10 more people telling their friends, and that opens the door for another event that you speak at. But if you went in there and you did this one that was 5,500 you made, you might make more the first time you speak to them, but none of those other opportunities exist now. Which one do you choose? I'm telling you this because, folks, this is just logic. Okay, but the emotion says 5,500, do the big number. Sometimes we just need to back off and understand that the big opportunities in our life require us to give today to get tomorrow. But if you focus on the get tomorrow, you'll never give today. You just won't. So if you just give and you just focus on doing a good job, solving a problem for someone else, you will always be taken care of on the end. And I don't know if it's ever been proven that that is like a true law, but I think it's like a spiritual law of the universe. And it works 100% of the time. But the other thing that works 100% of the time is, like earlier, when I said, you know, let me go back to the slide. I'll tell you, this works 100% of the time. And I know for a fact that over 100 people on here, some of you were like thinking, that's impossible. Let's just get rid of the 2 to 3 million. When I said 5 to 10, I know some people like, oh, I'll never be able to do that. Oh, I'm starting too late, or this or that. Well, if you don't think this is possible, it never will be. But if every day of your life, what if every day of your life, what if today you just wrote down, I'm going to have $5 million in 10 years. Okay. What if you just wrote that down? I don't care what you put. What if you wrote that down on a piece of paper and then you posted it on your mirror? And every single day when you woke up, all you did is you said, in 9 years and 8 months, I'm going to have $5 million. And every day you just did that countdown. You just kept telling yourself. You never questioned it. You never went out and like had a bad day and came back and said, oh man, this is never going to happen. I better change this. No, you just kept it. But every day you confirmed and reconfirmed that number. What do you think would happen? You'd have $5 million. It's the only thing that can happen. If every day that's what you thought about, and every day that's what you worked toward, and every day you told yourself that I'm going to have that, nothing else can happen. Listen, like I'm not just saying that. I have nothing to gain by saying that. That's just the way it works. But if you said to yourself, I'm never going to have that, you will never have that. So change the way you think and change the way you think about money, and then put some action behind it by learning the way that money really works. And that's a small number. Like you might as well start upping the ante a little bit, because that's weak. That's weak thinking. Like, let's put a 1 behind that. And then let's put a 2, let's put a 10, let's put a 5. But if all you ever focus on, like some of you are thinking, oh, I wish I could just make 10,000 a month. Don't wish. But if all you think about is making $10,000 a month, that's all you'll ever make. So why don't you change it to 100,000 a month? Oh, there's just no way. Well, there's no way if you say there's no way. Start changing the dollars, add a zero to things and start really working toward them. But don't get distracted. Don't let people tell you you're crazy. Actually, you should tell people so that they do tell you you're crazy. And then you tell them why they're crazy to believe that that's not possible. That would be better because that would reconfirm even harder your belief system. Because if someone says, oh, there's no way, how are you going to do that? I haven't figured out the how, but I know the why. And I'm going to have this. And you just keep saying that. You just keep saying it. And you keep confirming it. It's going to happen. But if you keep making excuses in your life, nothing's going to happen. Nothing's going to change. Everything that you live today, everything you bitch about today, everything you complain about today will still be what you complain about tomorrow and the next day and the next day and the next day. Until you decide to draw the line in the sand and say no more. I had to do that. I was the biggest complainer about money. I grew up in a family without money. I complained about money. I always focused and just looked at like not having money. I always went to a negative mindset. Every time I do that, things start going bad. Steven's even seen that. I still tend to go back to those days sometimes. Things go bad, one thing goes bad, all of a sudden your negativity kicks in, and all of a sudden it perpetuates and more bad things happen. But when you break the cycle and you go back to the positive thinking, all of a sudden it turns back positive. And I don't know why, but checks just show up in the mail. Does that make sense to you folks? I know it's not teaching you a tactical way to do it, but that we're going to get that this weekend. But if I can't fix mindsets. It's the one thing we can't fix. We can fix a lot of things. You're broken, you're broke, you don't have money, you got a lot of debt. We can fix that. I can't fix your mindset.
One quick question there. Just saying, just can you explain real quickly why the insurance companies limit how much you can, how much insurance is on somebody?
Oh, the human life value, it's simple. The insurance companies, have to kind of come up with metrics to decide how much risk they want to take on each life. And their risk is going to be determined, this is just the metrics that they use and they have for a long time, is your income and your assets. So your income and assets drive how much they'll take for risk. What is the risk to an insurance company? The risk is you die. And when you die, what has to happen? They have to pay out to your beneficiaries. So putting it on the board, so if your income's 100,000, and I don't know the numbers, and then you got maybe 500,000 in assets. So these numbers will drive the insurance company to come up with what's called a human life value. Now that human life value will change every single year, but that human life value this year is going to be based on income and assets. And the reason for that is this is how they figure out how much risk they want to take per person. This goes up, the amount of risk they'll take goes up. This goes up, the amount of risk they'll take goes up again. So over your life, course of life, especially if you follow that curve that I drew on there, as your income and your assets go up, the risk the insurance company is willing to take on you goes up with it.
Newly released Fed interest rate hike. Drum roll. Anybody want to guess the amount? Half point, 3/4, full
1
point?
point.
What do you guys think?
Full point.
What do you guys think? Put it in the chat real fast. What are you guys betting on? All right. It was 75 basis points.
Okay, so they kept it at 75.
Yeah.
Well, the
Back to
market's
back though. I mean, that's a point and a half in the last.
Yeah. That's still a lot, but that's what the market was probably building in. So that'll be good for the markets. 75 bips. Wow. See, Peter said 0.5%. There are some people thinking that they were going to do 0.5%. I can't understand why they would have done that, but yeah, that's crazy. Let's see. One more question, Steve. The cash value grows. Oh, is that you, Steven?
Yeah, I was responding to somebody. So somebody said, what is the best way to use a $10,000 loan? And maybe we want to expand that just to kind of, maybe like using a HELOC or something.
What do you mean a $10,000 loan though?
I don't know. It just says, what is the best way to use a $10,000 loan? So Jermaine, maybe if you want to expand on that question, we can answer it.
Yeah, that's just not enough to go on because I don't know enough about you, your needs, your goals. I mean, could say a lot of things. Best way to use 10 grand. I mean, do you have any credit card debt? Right out of the hole, I don't need to know anything about you, but you got any credit card debt? Because if you, here's the thing, and I can't understand why people, and usually it's the younger folks that, that do this. I'm not picking on younger folks. I still consider myself young at heart, but, and I'm just going to use, let's say you got $10,000 in credit cards and a car loan. Okay. Credit cards are 7, and let's just say your car loan's 3. I'm just using simple math. You got these. Now let's assume the credit card debt is costing you 15% And let's do the car loan at 3%. And the credit cards each month, I'll just put 500 because you're trying to pay them off. And the car loan, I don't know, let's say 250. So you got over here, you got $10,000. Now, Stephen, did he say a loan, like a $10,000 loan?
Yeah, $10,000 loan.
Does he mean a loan from the policy? Does he mean a loan from the HELOC? Because it's, all right, so we'll just call this a loan. Let's say the loan is at a rate of 3% fixed. The best way to use this $10,000 loan at 3% is to pay off the $7,000 in credit cards that are costing you 15%, and then take back the $500. Okay, so the $500 comes back because it's a higher percentage. So you just made a spread, which is equivalent to 15 minus the 3, which is the cost. So you made a 12-point spread. That's a pretty good return on your money with zero risk. I would even argue if you had a loan at 3 and you had a car loan at 3, if you had nowhere else for the money to go, I would just take back the car loan. I mean, I probably should increase this to 4 to make it make sense, even if it was a percentage point that you're making. But if it was 3 for 3, I don't know. I'd probably try to find somewhere else for it to go, actually, now that I think about it. I don't know if that answers the question. It's kind of a just open-ended question. Can you forward or send the name of the video where your case studied Vivi's policy without making withdrawals? I can just email it. Here, Luanda, can you email that to me to this email? I'm spreading my emails around so that I can track these things differently. Just send that request to me and I'll shoot you over Vivi Lucky Jeans. Hard money lending, investing. Yeah, I mean, that's another thing Peter said, if you had 10,000, you could lend that money out at 12. I just did this because that's a zero risk, but you could also lend it out through Private Money Club. I don't know whether that would be something that would work or whatnot, but you could always do that. Lots of ways. So with that being said, folks, we're going to see a lot of you this weekend, and I just want to spend 1 second. We're doing something we've never done. So technology is not our best friend, but we're going to have it figured out because we've got the news or the TV station running all the AV so that I don't screw it up. We are going to literally be streaming live, but we're going to be doing this really unique. Stephen's going to be moderating the entire virtual event. So in this studio right here, Stephen's going to be moderating and watching all your questions coming in for the different things, answering as many as he can as the speakers go. When the speakers are done on stage, the speakers are then going to come over here and they're going to spend 5, maybe 8 minutes max, just kind of answering whatever questions you directly have for that speaker and just telling you a little bit about, the speaker that they didn't say from stage. And that's going to be a cool little outcast that's only going to be available, that little thing that we're doing with the speakers. Unfortunately, the live people that show up, they're not going to have that. So that's only going to be a special thing for the virtual attendees for this event. I've only seen one other event do this. It was really cool. I was a speaker and I got ushered over to the virtual studio and we had a ton of fun. It was wild, actually. So we're going to try it. So all of you are going to be in for a nice little treat on the virtual side because we're doing something we've never done before. And Stephen, I'm sure, will bring the heat.
Good stuff, man. Good stuff. I'm glad to see you. I'm going to have a pretty good crowd on the virtual side, and we'll have some fun. We'll find out some ways to have a good time over the weekend. I can promise you that. So I look forward to seeing everybody in person that's coming to Buffalo, and seeing the rest of you guys on the Zoom screen. So I don't know how the Zoom's set up, if we're all going to see each other or you just see me, but it's going to be very interactive. So we'll plan on having a great weekend together.
Love it. All right, folks. Thank you all for joining us for another week of Wealth Webinar. We'll see you all this weekend. Until then, have a good day. All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.